I've known Richard for a very long time, I will say, and to have him say the word awesome, even though it was in a very British way, is progress. So I would like to, Richard, thank you very much. Progress, not perfection, right? Rebecca, Matthew, thank you very much for joining us. Nice to see you fit, healthy and well.
Yes, thank you.
Matthew, this is your second Instech stage in 2 different countries in 2 weeks.
That's right.
That's a record, right? I think so. There's no award because Robin's taken the emergency trousers. So I'm sorry, but thank you very much. Let's start with quick intros.
So I'm Rebecca. What I do, actually, I heard a really good story today.
About what you do?
About what I do. And I just thought I'd tell you. Somebody in this room who I met for the first time said to me, I heard that you've taken a really antiquated service-oriented business and transformed it and really turned it around. I think that is what I do with the help of my team of close to 250 people, of which Matt is one of them.
I'm a managing director at Kroll in our fixed asset advisory services business, and I lead our UK and our Netherlands practices.
Perfect. So for those that don't know, I know Kroll's got a 100-year history. We've got probably maximum 15 minutes. What's the 60-second version of that antiquated industry that you transformed?
So I know Robin and Matthew are both saying, right, this is a challenge for her to say something in 60 seconds. So I suppose the reason that we're here is because we actually have a digital platform, a valuation platform that we developed internally for us. And it just so happens that through doing that, the market have decided that it's of interest to them and they want to purchase it. We have solved a huge problem, an endemic problem of underinsurance by delivering this for you guys today. A snapshot of history, I suppose. Has anyone heard of American appraisal? Yes.
Lots of hands go up and nods.
Hands up, yeah. So basically, old school insurance valuation firm, that's us. We are basically the same people, different dress. So how do we get from that to here? A few key milestones in there that I'll talk about. One was out on site doing valuation work, met AXA, and AXA said to me, if you want to be our valuation partner, you've got to build some tech. And I'm not a tech person, but I did say, okay. And so I built a little bit of it, which now looking back is probably like the prototype and the pilot for what we've got sitting here today. And that was about 7 years ago. We then got hit with COVID and we were like, well, okay, 200 and odd people who have to go somewhere to do something, we're going to have to go virtual. And what's downtime look like? Downtime looks like, let's finish this valuation engine, finish the valuation engine. And then I think it was a blessing in disguise, but we then spent a lot of money on a software development and engineering business, no-code platform, and we built the product, which is a global valuation platform that we're here to tell you about today.
I need a quick question, actually, to the audience. Hands up for this one. This is one of my least favorite questions as a consumer buying insurance. And it might be a British thing. I don't think it is. Does everyone in the room know what the actual rebuild cost of their property is if you haven't built your own house? Hands up if you know I'm a little bit surprised, scared. There's like 4 hands gone up. It's more than I thought was going to be up. But Megan, thank you very much. 5. Okay, that's more than I thought.
Too much is the answer though, right?
Okay, I get it. But when someone says to me, does your lock conform to this? Or how much does it cost to build your house? I'm like, I'm not a builder. There was 119 people that didn't put their hand up though. So Matthew, tell us how the service works. When do people come to you? How do they engage? What's the service model look like?
Yeah, so in the past, we weren't really engaged with most of the market that's here, right? We were serving just the risk managers, the big corporates, the IKEAs, the Coca-Colas of the world. And then, like Rebecca mentioned, we heard from the market that there was this need for a more scalable solution. And we started getting inquiries in for hundreds of properties, thousands of properties, hundreds of thousands of properties, you get the idea. And they said, give us a valuation just based on an address. And we said, we'll accept this challenge, okay? And so what we did was we took all of the data that we have, all of our standards, our methodologies, and built an algorithm that basically we feed data through an algorithm and produce an automated valuation result, or in some cases, just an adequacy assessment. So companies come to us and they say, I have this whole book of properties. I want to know where my risk lies. How much am I underinsured? And so it allows them to benchmark their risk, identify areas of underinsurance, and then target those for maybe a set of eyes or an expert to go look at it.
But almost back to the SME question earlier, not all customers are the same size, right? So how do you deal with a small customer versus someone that turns up with 100,000 lat longs and says, help me understand this?
Well, that was also part of the beauty of what we built, is that now that it's scalable, it means we're able to make it more cost effective for people and offer a pretty low cost valuation for any mom and pop down the street. So we're finding that it's not just the big players with tons of properties that are coming to us, but smaller brokers that are part of a network who are servicing their own clients, and could be a garage down the street or...
Yeah, that's what it's about, right, as well, insurance. We've got to protect everybody, not just the people who can afford it. And so I felt quite strongly that you got owner-managed businesses, that those businesses, they might have one location and everything about their life is in that one location. So like, let's make a quality service available to them through automation.
So 25 years ago, someone built a thing, like made the internet quite cool and exciting. We're part of it here today. Isn't all this easily available online and in different places, or why would I come to you?
So yes, it's very available. It's all very available.
Great, we're done.
Right?
No?
So there's data everywhere. So you take the data, because we actually have had to have a lot of data. We're doing valuations globally. So we subscribe, we buy it from everywhere. It's all in different formats, it's all in different structures, some of it's in different languages, some needs mapping. And then let's not talk about the legalities of using it and how you can use it and what licenses you have to get to be able to use it. And then, yes, then you've got your data, but what does it do? It doesn't do anything. So then you overlay the valuation algorithm that we've built, the engine that we've built, then you take into consideration that the team actually goes to verify that data. We have 31,000 locations a year where someone's gone out and taken all the COPE data and put it in. And that is the difference. That's why us. So it's global. It has all of those different layers and factors. So we're lucky because we're not sitting here saying, oh, we're a valuation firm, not a tech company, and not a tech company. We've got those two elements that have been a really cool marriage. I mean, it's been a ride, and quite a quick one, because like you said before, with the whole AI thing, everyone's disappointed. Well, not everyone's disappointed, but it's a disappointment to see that people are still talking about it. But that movement for AI has been super quick, and so it's something that we've just had to keep pushing and pushing and pushing to get to where we are.
So it's not a simple search.
That's exactly right. I could have said it in a little bit more succinct way.
I'm gonna change gears very quickly. ESG's on everyone's agenda, has been on the agenda, off the agenda, on the agenda and off the agenda like mad over the last couple of years. But equally, when it comes to property damage, property valuation, what's your perspective on this?
I've really tried to keep it off my agenda. I've tried to keep
You don't get that choice, because we need it.
I've tried to keep it off the agenda. However, I suppose the things I'm seeing, and some of it, outside of the relevance of this today, but relevant to valuation, is in the energy space, right? There's targets there, 2035, 2050. People have to do something. So we have, because of inflation and the underinsurance, we've got like different new clauses, like the LMA clause for Lloyd's, 5514, get a property damage clause. That's produced conversations about, okay, we're not allowed to put it back as it is, so we've got to do something else with it. So how do we value it? And so now we're looking at agreed valuations and like agreed value and actual cash value. And when we're looking at this side, the property, real property assets, we've got regulated countries, we've got energy ratings, but we're also starting to see like green reinstatement clauses. Is that a thing over here as well? So we've got green reinstatement clauses. If you lose your property, then actually an insurer will pay you more to put it back if it's more environmentally friendly, or if it allows your energy efficiency to increase. And so actually, what we're looking at now, I did think it was going to be a tick box exercise, so we build the platform and then it would be done, but it's not, because you have to keep evolving. So where we are now is, what data can we collect on property that we could actually use to predict what the cost would be to value for different scenarios? So, okay, like what does my portfolio look like to increase the energy efficiency of every property by 1 rating? So it's a cool, interesting space to be in, that one.
And actually, if I build on it quickly, Matthew, for you, it's not just property valuation. The legislation is changing all the time. There's policies that have conditions around betterment and not in different places. How do you keep track of all this sort of stuff? What are you doing inside the platform or elsewhere to go grab that and keep it up to date?
Talk.
Yeah, listen, and luckily we have the largest valuation team in the world, so we've got 200 people plus, all with their ear to the ground, knowing what's the latest regulations in place, and also the data that we retrieve. It's all, if you're looking at recent construction data, that's going to be based on building to that standard, right? So we're always using the latest data. We update our database monthly, or depending on where it's coming from, annually. But yeah, it's difficult, and sometimes, we just rely on hearing it from the marketplace and being told what we need to factor in the future, and that's part of what's gotten us here.
Monthly is interesting. I think we live in a world of real-time data. Like, if I look at my kids, they're teenagers going on God knows what, but they're like now generations now. So if you're updating monthly, how often are our insurance community or risk management community asking or seeking that? Is it annually on renewal, or what is it?
It is annually on renewal, but in the past, it was, we used to even tell people 5 to 7 years, you need to get it looked at again, and somebody needs to go out to site and you need to renew your valuations. And that was if they did one at all. And now we're hearing, we did a poll last week at the Instech event, and more people, encouragingly enough, were saying 3 years, 1 year, annually, we need to renew these values, because 5-10 years ago, if you waited 5 years, it might be 10% off. But now if you're waiting 5-10 years, you might be 20-30% off.
I can't imagine any of us waiting 5 to 10 years for anything these days. Never mind 5 to 10 minutes. Look, you're at Google. I can't ask you about technology. You've talked about the platform that you've built. What's been the impact of technology for your business, I guess, from an AI automation? I can't not say the words Gen AI. How have you seen that change what you do and this 100-year-old behemoth that you've now transformed? How's that changed, Matthew, in your mind?
Yeah, well, the automation piece is what I've been working on the last 5 years, and that's what's been able to make it scalable for us, right? And the API piece is what makes it accessible to our clients. So we partner with a bunch of exciting firms who are interested in, and they don't want another platform. They want to use an API that plugs right into theirs, and they can collect the data, the inputs that we need to get back evaluations. So the automation and the API have been instrumental in getting us to where we are. And then what's next is the AI, right? What can we do with all the other data points that we collect, all the COPE data, all the site visit information, that every day we're going out to site with hundreds of people, 30,000 a year, collecting information on machines and different building construction types. And the platform that we built is, it's in place and it's for building reinstatement values. But there's a whole other side of the business for machinery and equipment. And what can we do there? And how do we...
Just gonna say though, I think you're gonna again. I'm one of those people who are going to disappoint you, because I'm going to say to you that, well, two things to this actually. So I'm going to say to you that we are still talking about it for AI. We're still talking about how to do it. But to Nasir's point, wherever he is, it's because there's this, right? We could do everything, and I want to do everything. And so it's kind of like, right, how do we? What enables us on this side of the fence with a business, right, with the efficiencies of the business, what enables us to move faster, to grow, to rebuild in learnings to make the algorithm stronger. And then on this side, like what is the effect on the product? So we didn't think we were going to be selling this to the market. We thought this was going to be an efficiency tool for us, right? Like, let's automate the simple stuff that we don't want to be spending our time doing, and keep the complex assets, dish that out to the people who've got the skills and they want to be doing that, right? So there's like a bit of job satisfaction in there.
You've always described InsurTech 1.0, because InsurTech 1.0 was going to transform the market and take out all the big guys. And I think InsurTech 2.0, whether Robin and Matthew agree, I know you guys have talked about this a lot, is actually we've got a really cool platform that enables you to do things differently.
Yeah.
So can we leverage the things that we've built for ourselves and let other people consume it? Feel free not to answer this one. I don't know if it's sensitive or not. What percentage of your clients are using those APIs?
It's just about be finished built.
So none?
Yeah, none.
Okay.
We have 3 who are signed up, waiting for it, and even here in New York this week, another 3 people who are like, we want it. We thought that it's a bit of a learning curve, right? We thought, we're going to have this platform, people will like log in and they'll do that. No, okay, fine for insured. Brokers, yes, they want the platform because they can keep all of their information. They can on-sell valuations. That shouldn't be a surprise that they want to earn from it. But then for the insurance company, they're all building out their own ecosystems of technology anyway. They don't want anything else to log into. It's just like, let's just plug it in and let's go. So I think there was a learning curve there. And so we've had to adapt, but we've got clear buckets of use cases, if you like, and how it can advantage and benefit people.
And the reason I ask is that we've been through that evolution where we've gone, hey, let's digitize, let's give you a portal, and let's give you an API, and let's give you something else. Yeah. And then you get to the APIs and someone says, it's the wrong shape API, or this is the wrong color, or whatever it might be. So it's kind of like a never-ending game. Where do you go next? So if you've seen the acceleration and pace from Cytora and HX and Guidewire, what's the next 12, 24, 36 months? It's like a hockey stick, I'm hoping. Like every client gets to APIs or they can't consume them, or?
Yeah, so it's funny you should say that, actually. We've got an investment committee who I have to report to, and I've got
They wrote to me. No, I'm joking.
got milestones that have been tracked against. So there are, we got to get a number, all of our existing clients, okay? So when they pay for our standard, they have to get access to this thing, right? So let's enable them to not do this every 7 years. Let's enable them to push a button or to search for an index to inflate properly through our advice. So get all of those clients on. Then actually work with the insurance companies. We've got some really cool fully digital insurance property insurance companies that we're working with at the moment. Where does it go? Iterate. I think that's, and obviously it's to grow.
I was about to ask you, what have I not asked you? But we've got a minute or 2 left. I'm going to ask the audience, is there any questions that I've not asked or they've not answered that you want to raise hands, questions straight away?
How does your solution compare to others in the market, like Verisk or Logic?
Yeah, so first off, I'm confident in saying that we're the only...
Sorry, question was, how does the solution that Kroll have compare and differ to the likes of Verisk or Core Logic and stuff in the market?
So I'm confident in saying we're the only global piece of valuation technology. Then I suppose we're not just by observed data or by people plugging in their data, we're by valuation layer. We also have valuation algorithm in there. So there's the expertise of the valuation in there. The other part is you engage in a fully digital valuation product, and then what happens when you got a question about it? So that's gone up by, it's doubled. Okay, what do you do? I mean, do you want to give us a call and ask us a question about why that's happened? And so there's also the people element and the consultancy element of it, where I think my own team would probably say, oh my God, she's going to take our jobs by digitizing it, but actually it hasn't done that at all. It's made it more valuable. It's just allowed the scale, and it's allowed the standardization, which is one of the things I feel really strongly about, right? We've got multiple providers on the ground through tech. Nobody knows how everything's done. We're quite transparent about how it's done. And so and it's done by listening to the market and taking the feedback. So it does evolve as well. And so if our standard is the one that's recognized in the market, then that's happy days.
The other thing I'll add to that is that ours has the capability of mass upload. So like I said before, you can put in 100,000 at a time and get it back instead of just one-off. So I think
an important part.
That sets us apart a little bit. And if you were to use the platform, it also serves as a management platform, so you can see all of your information in one place. It aggregates it. You can filter by account. You can export reports by account or by region or however you want to create a hierarchy.
And I think also our product manager's sitting over there, and she would probably shoot me in the head with an arrow if I didn't say, because it's no code, you can actually do what you need to do with it. You can, it's like, there's our thing. And now you want this, and now you want this, and now you want this, and now you want this. It's bespoke.
I was going to say one final question.
How do you deal with campuses?
So,
Want to repeat it?
No, sorry, Jenny. How do you deal with campuses?
How do you deal with campuses?
Campuses. Yeah, we value a lot of education buildings, and I assume that's what you're
States.
referring to. The platform itself does have guardrails in place, so we won't put anything through it that should not be subject to an automated valuation, right? We still think that there's a time and a place for experts to come in. So if it was less than 50 million sum insured as a building, we could run it through. We do have 60 different building types standards in the platform, and school buildings are one of them. We have elementary, university, et cetera. So if it was meeting the criteria for valuation, we could run it through.
I think also actually, if it's like if you think about it, if you've got like a mixed bag of mixed portfolio, some of it can go through, some of it gets done by a human, but it's all in the same place. And so actually, there's cost benefits in having the access to the technology piece, whereas otherwise it might have either just got left because we're not going to pay for those things to be valued. So all of that.
I'm going to cheat. I'm going to ask one quick question of my own. Do people typically get one valuation, or is it like everyone else out there and they end up with three? Back to your point about Verisk and core logic. If there's depending on the size or complexity, or is there a guardrail that says, hey, it's over 50 million, I need 3 different quotes, I'll take the average of all 3?
I wouldn't say people even want to pay for a valuation typically, so I don't think this.
What was really encouraging was last week we had another poll that said, what do you want from a data provider? Is it price, is it time, or is it quality? And everybody said quality. So I think we set ourselves apart with the experience that we have, the legacy American appraisal guys, that if people come to Kroll, they know they're getting consistency and they're getting access to a global firm that has some reach. And so we don't know necessarily if they're always shopping around. We tend to think they are, and we sometimes lose out on price, but that's fine. There's plenty of people out there who are willing to pay for...
You pay for what you get, right?
Yeah,
you
exactly.
ultimately pay for what you get.
That's
A
right.
perfect place to end. Thank you very much,
We have a
Rebecca.
question for you, though.
Oh, no, let's not allow it. Okay, go, quick one.
One of your colleagues at Google last week was talking about a whole host of things, and she mentioned that you guys had a portfolio of 160 billion of property. And I was wondering if you ever have that independently verified.
And that is a question for Alison Quinlivan or Lauren Nicol. We were talking about property and Google's assets a while back. That's a very interesting question. That is our insurance teams, not Google Cloud's teams.
Give us a call if you ever want.
I'm sure Laura will love it. Ladies and gentlemen, a round of applause.
Thank you.
Thank you.